Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. As the Philippine economy navigates a complex landscape of global uncertainties and domestic challenges, key economic indicators such as interest rates, inflation, and technological adoption are at the forefront of policy discussions. Today on Follow the Money, we delve into these pressing issues with Bank of the Philippine Islands lead economist Jun Neri to gain insights into the nation's economic trajectory. Hello again, Jun, and good to see you again.
Hello, Raine, and great to be in your program.
Welcome to Follow the Money. Of course, biggest news of last week, the Bangko Sentral ng Pilipinas holding rates steady at 5.75% to hedge against global uncertainties, particularly in light of potential trade policy shifts by the U.S. administration. It surprised a lot of parties, a lot of groups, and even economists. Given these global uncertainties, are there factors that the BSP might have to consider in its future monetary policy decisions, and how might these impact the Philippine economy? Are you still seeing 50 basis points for the year?
Yeah, Raine, BSP is very focused on its main goal, which is inflation. And while it is on target at 2.9%, right at the middle of the 2 to 4% target, they were cautious last week of the possibility of that breaching later on, no? Just because there are so many things happening in many parts of the world, especially in the United States. No? So they have to watch this closely, even if it means not being able to support growth in the meantime, because a lot of analysts are saying that the BSP needs to move faster with the rate cuts, so that they can support the growth of the economy. But they can't just do this if it will mean it will risk us having a high inflation. So if they look at the US, there's so many things they have to watch now. It's not just tariffs, Raine. It's not just deportation, because that's a big risk. No? Deportation can mean a tighter labor market in the US, and that could increase wages and again, inflationary. So if the dollar strengthens as a result of tight labor market, then the Fed cannot reduce interest rates, and the strength of the dollar can actually exert pressure on the peso, causing inflation to bounce back. So they're watching that. They're also watching executive orders made by the US president. Some of them could actually affect inflation down the road. No? So, but don't think that all of the policies being introduced by Mr. Trump will all be inflationary. He's also trying to introduce some policies that could lead to disinflation or slower inflation, including producing more oil. So he's encouraging Americans and energy producers to generate more energy, you know, and that could lower the price of oil. That could benefit the Philippines through lower oil costs, and therefore allow the peso to actually strengthen. So there is also that element, no, that the BSP is trying to watch. You know? And there are other factors that can help the U.S. economy manage inflation better, including deregulation. Because if deregulation, if companies become more efficient, they can collect more taxes, and this will again help the dollar weaken a bit, no, against the other currencies. So the plate of the BSP is so full. They have to watch so many things, no? Not just local developments, but especially abroad, and how it can affect inflation, Raine.
Right, and in fact, what if, Trump is able to help broker that peace deal between Russia and Ukraine? That's actually also could potentially disinflationary.
Agreed. He has already, to some extent, achieved that in the Middle East. No, the peace talks between some parts of the Middle East is helping improve the perception on oil prices. No? So those factors could actually, in the end, benefit the peso, and BSP could continue with the rate cuts. No? But for now, they're watching the potentially inflationary components of Mr. Trump's policies.
Right, and us on our part are watching everything that the BSP has been saying up to even 1 week before the monetary board's decision, and even after that decision, they were saying that, 50 basis points is still on the table. Do you agree?
Yes, they could have the space. As we are on target, we will benefit in the second quarter, Raine, since we have a favorable base effects in 2Q. No? We had high inflation prints the same time last year in the second quarter. And if we see moderate increases month on month this year, then that will mean headline numbers will even be lower than 3%, maybe even approach the 2.5% level. So that gives them some space if it's clearer what Mr. Trump will do about tariffs, and we see low inflation prints in the second quarter. After the reserve requirement cut, they can proceed with another rate cut. Raine. The second half is a little bit less accommodating. The scope for the BSP in the second half might be a little bit tighter just because of base effects. But again, who knows if oil prices will really fall under a Trump administration? That will help the cause of the BSP to stimulate the economy with lower inflation, lower interest rates.
Certainly. Well, in the meantime, the Bangko Sentral ng Pilipinas already teased that it is considering cutting the bank's reserve ratio in an effort to boost lending and economic activity. Would this be a welcome move? And how do you see this impacting the broader economy? Are there potential risks or benefits for the banking sector and the credit growth of the Philippines? I hear that's credit rating is really top of mind for some individuals, some groups.
Yeah, Raine, I watched a governor's interview, and he said that they are still studying the impact of the last reserve requirement cut on the economy. But in general, it is seen as favorable. In fact, later on we'll be talking about the growth of loans in the industry, and it has already hit the 12.5%, I think, level or close to that level. And we could attribute a large part of that to the reserve requirement cut last year, October of last year, where the reserve requirement was reduced from 9.5% to 7%, releasing a lot of more than 300 billion pesos worth for lending. So that essentially expands the supply of funds available in the market. Even if BSP doesn't cut interest rates, it actually increases the amount of available lending funds from the banks, because now they don't have to hold on to 90% or 87.5% of their deposits in the form of reserves. Now they can lend out 93% of their loanable funds to the public, and this has, we think, already benefited the economy. So this will continue if they reduce the reserve requirement some more from the 7% level to 5%. I think they have hinted at that. Again, it's expanding the balance sheet. It's making the funds available to more companies, to more industries than before October. Raine. That's the main benefit of the reserve requirement. And we're hoping the capital markets will also benefit from this, as again, the available funds will make the banks more creative in looking for avenues or outlets by which they can deploy the now funds that are available to the public. So that's the benefit. It's really beneficial. We're also able to make the playing field between foreign and local banks more level, because foreign banks have no reserve requirement, only local banks have.
Well, just as you mentioned, bank lending in the Philippines has reached a 2-year high, indicating increased economic activity. Are there sectors primarily driving this surge in bank lending? And what does this indicate about the broader economic recovery?
Yeah, for the last 3 years, Raine, it's been the consumer sector that's been leading the lending activity of the banks. No? That has kept the growth positive all this time, sometimes even close to 10%. But this time around, you're seeing utilities companies and other sectors in subsectors in property, not all property, as we all know that there is some excess supply in office and residences. No? So in utilities, there's water, there's electricity, there's many components that are actually seeing significant improvements in the growth rates. Manufacturing is still a little bit soft. We're still recovering from pre-pandemic levels, no? But it's a broad increase, actually, improvement across. And again, this can be attributed to a large extent on the reserve requirement reductions. And now that we're looking for more reductions, then the prospects there for better growth, especially on those sectors that are lagging behind, should come in before the end of the year, if not next year.
We'll discuss those sectors that are lagging behind a little bit more in the second half of the show. But meanwhile, of course, you already mentioned the Trump tariffs, and of course, there's a lot of fear from among participants in the supply chain, and they're expecting some issues already. Lots of eyes on AI development and adoption, of course, emanating from technology in China, and yet we're still, the Philippines, still delayed in the adoption of AI from what we hear from various stakeholders. Are there ways that the Philippines, you think, might be able to address the supply chain and perhaps skills, challenges, issues to accelerate integration into its industries? I know banking is already also on the forefront of adoption of AI to help ease business.
Yeah, it's. I think on the part of the private sector, we're not seeing that many challenges. A lot of them are able to adapt quickly. The software is not that expensive, and many, especially in the services sector, are able to use them to improve efficiency overall. But I don't really see the gauges or the measurements by which we can check the adoption levels, especially in the public sector. No, as far as I know, the Development Academy of the Philippines, the DAP, who is on top of training our government officials, they've done a lot in that respect. They are providing a lot of training, especially to the senior officials of the public sector. Now, I'm not sure if this is happening at all levels of government officials. So that's probably the area that we need to watch more closely. But if we're talking about the private sector, especially the big companies, many of them are able to adapt. We're not too sure whether the MSMEs are keeping up. No, but as far as we're concerned, BPI has been lending a lot to the MSME sector. Last year, we doubled our exposure to MSMEs, and we are quite confident that a good part of them are actually adopting AI. No, I think what's concerning our businessmen is if the outsourcing sector will be disrupted by AI and robotics, Raine, no, and that continues to remain uncertain. No? But most recent anecdotal evidence seems to show that many foreign countries still want to hire BPOs here in the Philippines, partner with companies here in the Philippines, because the areas that we cover in outsourcing are areas that many other countries appear to shy away from. No? So Singapore has moved away from some outsourcing businesses. Americans are not too keen to enter the segments that we're at. Back office, medical, transcription, voice, those areas they shy away from, and their labor costs are very expensive. So far, so good, Raine, but of course we have to be watchful of threats to disrupt the sector if we do not adopt quickly. You know?
Yep, and certainly we've been talking to a lot of those stakeholders in the outsourcing sector, and primarily they were saying that technology has leveled up, therefore, our skills, our people must level up as well. Still a lot to discuss in the next half of the show. We have a pause for a few reminders, but when we return, we'll discuss with BPI's Jun Neri the implications of recent importation policies on local agriculture. Stay on BNC and follow the money.
This February, let's celebrate love in all its beautiful forms. Whether it's romance, friendship, or family, love makes every moment special. From our hearts to yours, Happy Love Month.
Welcome back to Follow the Money. We're still with BPI's lead economist, Jun Neri. Jun, the government has approved the importation of 3,000 more metric tons of red onions and 1,000 metric tons of white onions to stabilize prices. We're importing even more rice in the middle of harvest season. They had already talked about importing laying hens just to beef up our supply of eggs, even when the stakeholders are saying we have enough eggs all the way to next year. These importation decisions, they do have an implication on the local farmers and the agricultural sector as a whole, but also, of course, eye on the inflation and the currency as well. If we're facing a 60 pesos to the dollar per currency fluctuation, that's going to cost us all these importation decisions.
That's right, Raine. So the emergency situation that the Agriculture Department has been trying to pursue is really to stabilize prices of key commodities, Raine. So there are times of the year when we see spikes in the price of commodities for various reasons, be it weather or temporary supply shortages. So government is trying to step in to try and to cushion the impact of such shortages in the short term. That's why they're announcing these emergencies of sorts. So it's really oftentimes it's the middleman who they're trying to address, because they of course would like to keep the farmers for the sake of food security, Raine, no? And really, it's not expected to be a permanent solution to the problems of spike in prices, no? But really to help ensure that the traders do not take too much advantage of sudden shortages, no? So maybe government can also target some of the funds that they are able to set aside to help the farmers, no? When the prices are depressed. So probably this part of their emergency powers that they can use some of the budget of the Department of Agriculture to help out the farmers. And it's really the middlemen that they're trying to ensure that doesn't abuse.
How do you suggest that government target the funds of these middlemen?
Oh, well, of course, there are investigations being conducted, just as the Congress did a few years back, no? So there are, of course, ways to inform these traders that they will be investigated if they don't bring out the supply. Now, the other thing, Raine, is our logistics sector in the Philippines really needs a lot more investments, and that's the permanent way to really solve the problems. The refrigerants, they are not readily available. The onions, there's a lot of supply of it when the harvest season comes, but a lot of them aren't being stored long enough for the public to be able to buy in a smoother pattern, no? So of course we all know that we cannot buy all the onions available in the market. So if there are companies who are willing to invest in particularly refrigerants, Raine, then that will really benefit not just the farmers, but even the local consumers. No? So Ayala Corporation is in that space. We built cold storage facilities built two storage facilities in Laguna and one in Mandaue City. So that is still not enough. We need to see more of that happening, and we're hoping that, banks like us can support companies who would like to get into that kind of business. We are very open to it. We've done a lot of that already, and we hope that more local corporations will get into that business, because the only way you can bridge the gap between consumers and vegetable producers is to be able to store them.
I hear you. I hear you, and certainly it seems like the reports that we've been receiving is that it's on a local government unit, LGU to LGU kind of initiative for them to build these cold storage facilities. Meanwhile, we also hear from the Finance Department that the Philippines is curtailing its appetite for offshore debt and focusing more on domestic borrowing to finance budget. Are there potential benefits, risks of this shift toward domestic borrowing for the country's fiscal health? Or is it correct to say that we're actually cutting or limiting our foreign debt when it seems like there are more of activities down the line in the pipeline?
Mm-hmm. Yeah, well, if the projects that will be involved do not really require foreign currency component to it, Raine, it's probably good to fund it locally. There's lots of liquidity in the system now, as we talked about earlier. The reserve requirement ratio has, among other factors, led to domestic liquidity being abundant. Money supply growth is growing at a healthy pace, and really there should be more than enough funding available in the domestic market, and because of the risks of possible volatility in currencies, because of all of these initiatives being done in the U.S., all of the geopolitics, all of the climate issues, it makes it a little bit riskier to be exposing ourselves to foreign currency obligations. In case you didn't notice, our foreign reserves too, Raine, has shrunk to less than $110 billion, and yet our foreign debt is now closer to $140 billion. So there has to be some kind of balance between the two,
Correct.
of our foreign reserves, which is with the BSP, and how much we owe abroad. Not too long ago, we actually had more reserves than our external debt. Not too long ago, in the middle of the 2010s, before 2020.
Do you feel that it was going into helping the peso?
Yes, that was actually one of the reasons why the peso was more stable during that period, and interest rates could actually be held at a lot lower levels. Now that our reserves are much smaller in relation to our external debt, whenever the U.S. increases interest rates, we almost always have to act accordingly and align our interest rates with them. And it's very difficult for BSP to reduce interest rates independently or carry out its monetary policy independently if we don't have enough reserves to cover for our debt. So maybe it is a conscious choice of our Bureau of Treasury to lighten a bit our exposure in foreign currency to ensure that there is some balance between our reserves and our external liabilities.
Still facing the threat from those Trump tariffs or the tariffs from the new trade policies from the new U.S. administration.
Correct.
DNL Industries sees opportunities, though, arising from the U.S.-China trade tensions, potentially benefiting local manufacturers. How do you see Philippine companies strategically positioning themselves to capitalize on the shifting dynamics of global trade? They were saying that as the U.S. Is limiting more trade out of China, then a lot of locators should consider the Philippines.
Yes, that's true. Raine, we have to be prepared for such opportunities. And as you say, as we see, we've already seen actually Vietnam capitalize on this even before all of these tariffs are being talked about or are being put in place. Vietnam has already taken over a lot of the industries that China have given up, no? And probably will be forced to give up because of these trade tensions. No? So the Philippines has to be prepared for such opportunities, and we think that there are niches by which the Philippines can actually join, and of course the Create More Act, hopefully, and some other initiatives of the government will all work together to enable a lot of Filipino companies to take advantage of these partnerships with the U.S. and its other partners in new spaces of new industries that we can explore. No?
Which new industries might those be?
Yeah, there are a lot in electronics, Raine, that as you know that there are many. The value chain in electronics is actually quite wide, no, and so far we've only been able to enter the semiconductor component, no. If China will have a hard time importing from us in the form of semiconductors, maybe we can partner with our ASEAN neighbors as well as directly with the United States. There are, as you know, some locators, now U.S. locators here in the Philippines, electronics sector, that the Philippines can partner with. No? Again, the challenge of high cost of electricity, matching of skills, the skill set with the needs of the sector are all very compelling reforms that we need to pursue to be able to really take advantage of these opportunities. But again, financial institutions like us are ready to partner with international companies and Filipino companies to ensure that we are able we are prepared for those kinds of opportunities.
Jun, given global events, especially emanating from the most powerful nation on the planet, and how our Philippine officials have been navigating these changes, how would you assess our economic performance? Would you issue a particular call to action, especially to the winners of the upcoming midterm elections and our economic managers?
Yeah, yes, of course, there needs to be more communication with our counterparts abroad, the newly appointed secretaries in the different divisions of government. There has to be some very strong engagements with them. Just recently, we had Ambassador Romualdez come over, who gave us a lot of good news about the U.S. Willing to really engage in many of the departments here in the Philippines, so we can work together. You know? The Philippines will probably not be an exception, totally exempted from all the tariffs, but it looks like they still want to partner more closely with the Philippines, especially with all the geopolitical alignments that are happening, you know, across the world. And of course, in our part of the world, the West Philippine Sea, that has to continue to be firmed up. And we see a lot of, again, opportunities for Filipinos to solidify. Hopefully, we can get the support of our legislators to approve these partnerships. No?
Which partnerships would you like them to prioritize?
Of course, in terms of defense and foreign affairs, even in finance, no? So central banks, no? So all of these major agencies of our government has to have immediate engagement with their new American counterparts. So it's clear to both sides, no? What kinds of opportunities can be taken advantage of, and allow our two countries to capitalize on these opportunities. No?
Lots of work to do, and we have to come out with them faster than U.S. President Trump can come out with those or sign those executive orders. Thank you so much, Jun Neri, lead economist at the Bank of the Philippine Islands. Always a pleasure to hear your valuable insights on these pressing economic issues. Hope to speak with you again soon.
Thank you too, Raine.
Thank you. Now, as the Philippines navigates through global uncertainties and domestic challenges, strategic policy decisions and proactive measures will be crucial in steering the nation towards sustainable growth. Before we go, we'll leave you with this thought from the only American president to serve 4 terms, Franklin D. Roosevelt. The only limit to our realization of tomorrow is our doubts of today. And that is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News Channel, always on top.